Well, a very good afternoon to you. Welcome to KTN Business Today. I'm glad you're able to join us. 10 years ago, something that you would purchase at 100 shillings, today you're purchasing it at 192 shillings, meaning that the purchase power of the Kenyan shilling has been eroded, or rather devalued, by 50%. What happened? We shall be engaging in that. At the same time, matters to do with car importation and the importation of, second used vehicles. There's been that discussion that has been ongoing in the industry. We shall be delving deeper into that and just re-examine what goes into that, what are the consequences, and if at all the government gets through with the policy which plans to bar the number of years of cars that are being imported to 5 years, what should be the implications of that? Also that we shall be, of course, delving deep into this wonderful afternoon. Sit tight and be ready to learn with me some more. Right now we take a look at the markets. At 100 shillings and 94 cents, selling at 101 shillings and 94 cents. The Kenyan shilling against the pound is buying at 131 shillings and 75 cents and selling at 132 shillings and 5 cents. Taking a look at the euro, it's buying at 112 shillings and 90 cents and it's selling at 113 shillings and 16 cents. Now, moving into the Nairobi Securities Exchange performance, the turnover stood at 622 million. The shares traded stood at 17.6 million. Then the NSE 20 share index stood at 2836.16 and the bonds traded stood at 2.3 billion. Now, the most active stock in the NSE this afternoon, KPLC, trading at 2.74 million shares. Then we have equity following with 1.27 million shares. Cooperative, it's following closely to equity at 1.22 million shares, and Safaricom closing up at 1.05 million shares. The winning stocks this afternoon, we have HF Group standing a stock going for 4 shillings and 45 cents and gaining by 9.88%. We have EA Goods, that is 13 shillings and 0 cents and improving by 4.00%. We have Total Kenya, share going at 29 shillings and 0 cents, increasing by 2.84%, and closing up is NSE at 13 shillings and 0 cents, improving by 2.36%. The losing stocks this afternoon, we have Eveready trading at 90 cents and dropping by 8.16%, followed by Olympia Capital trading at 2 shillings and 25 cents, dropping by 6.25%. Then Uchumi comes in at 34 cents, dropping by 5.56%. And we have NBO Business Venture trading at 95 cents, dropping by 5.00%. And now on our social media platform, we want to start a conversation. The question that we're asking, have you experienced the economic growth in the country, which the government says is at 6.3%? Have you experienced economic growth in the country, which the government says is at 6.3%? Speak to us at KTN News KE at @no_keep_Kemboi. The hashtag is KTN Business Today, and I shall be sampling your views shortly. Now, starting us off is matters currency. The country has been operating a managed shilling rather than a free float currency. This according to analysis by Amana Capital Limited. The report indicates the currency is overvalued by up to 30%. Brenda Kerubo with the details.
It all started with the International Monetary Fund The global lender said last year September that the shilling is overvalued by 17%, and now findings from a report compiled by Amana Capital indicates the figure is almost double the IMF estimates.
That current account is narrowing because you're comparing to a GDP figure which we are also not in agreement with. But if you look at purchasing power parity, balance of payment analysis, growth in M3, everything points to the shilling being overvalued.
Amanda says a managed shilling by the Central Bank of Kenya will make exports more expensive in the short run compared to competitors.
For overvalued currency, one, it makes your exports expensive and brings uncertainty, especially for a net importing country. You're not sure. Is it going to flip the next day? Is it going to go on? So with 5.1 months import cover for the government, where is the level of import cover where they will not be able to support the shilling?
Central Bank of Kenya Governor Patrick Njoroge has reiterated the currency is properly valued, linking its value to the forces of demand and supply. Remarks shared by Kenya Bankers Association CEO Habilo Laka.
I think the official policy of the government is that is a free-floating shilling, depending on the market forces, and the central bank normally comes into the market to smoothen out any volatilities. For example, to combat attacks of speculation and that kind of negative tendencies. But otherwise, then it's left to free-floating, depending on the market forces.
CBK uses standard approaches such as purchasing power parity, elasticity's real equilibrium exchange rate to assess the shilling.
Central Bank governor says it's a flexible exchange rate, market forces. I don't really know what a flexible exchange rate is, but if it's market forces, then the economic elements that we discussed should be pushing the shilling to devalue by 30%.
The shilling is about 9900 to the dollar. The Central Bank of Kenya says this is thanks to a lowering current account deficit. Of course, this has balanced forex reserves, but analysts such as Amana do not agree with the lender of last resort. I'm Brenda Kirubo for KTN News.
Still in the markets, the Capital Markets Authority has released the soundness report for Q1 of 2019. This is the 10th volume of the soundness report, and the theme is capital markets infrastructure as an enabler of efficiency and market liquidity. What does the future hold for Kenya? The report features the current state of our local capital markets infrastructure and challenges. KTN's Malika Kazia has more.
Today, the report covers various factors that surround the Kenyan and African economy at large.
We are using two new instruments. The first one is what we call infringement notice. Infringement notice is, in our view, you have done something wrong. And since you've done something wrong, we can take you through an enforcement process.
Particularly where we're talking about government portion of debt, because debt can be private sector, national, but I think the easiest way of indicating that what that would be looking at the deficit with regard to the budget. Perhaps the word should not be that it will increase, but noting what government projects are available under the MTP, we expect that their circumstances may force government to borrow.
The report noted that Kenya is currently weighing the possibility of returning to the international debt market for a planned $2.5 billion euro bond, partially to help settle maturing debt obligations, noting the aggregate costs of projects under the medium-term plan and by extension the Big Four agenda, together with county funding requirements estimated at 13 trillion shillings over the next 5 years, as against Budget Policy Statement 2019-2020 projections of 12.5 trillion, there is likely to be a Kenya shillings 0.5 trillion funding gap. Malika Kazia, KTN News.
And now in the world of agriculture, grain growers in Kenya, including maize farmers under the Cereals Growers Association, have decried lack of government commitment towards addressing food security and supporting local farmers in attaining this. Besides high cost of farm inputs, the farmers now warn of a looming maize crisis in 2020.
Ukiona saizi utatumia 50,000 zaidi kukuza mahindi Kenya. Ukilinganisha na mkulima ambaye yako tuseme Uingereza, Canada, Amerika, atakutolea mahindi gharama yake ikiwa ni kama 23,000. Lakini hapa Kenya hivi tunafika zaidi ya 50,000.
Unaomba serikali wawache wakulima wasiweke siasa ndani. Kama wanataka kwenda kuleta mahindi nje ya biashara ama nini, hiyo ni seri yao. Watu ya Kenya watakufa njaa.
Sales is charged, yes. You are not involved in determining the rate, and eventually you do not see what it has done, and that is a pain to a lot of farmers.
Maize being taken to the mills, but the problem we're having now is our strategic food reserve is now in trouble because they are not going to raise 2 million bags for strategic food reserve. So what about the future? So we're looking at 2020. We should all be concerned about 2020, not 2019.
Coca-Cola Central, East and West Africa Limited has appointed Philippine Mtikititi as General Manager, East and Central Africa franchise effective 1st June 2019, based in Nairobi, Kenya. In her new role, Philippine will be responsible for developing and managing the business strategy across East and Central Africa. Prior to her appointment, Philippine was a region franchise manager for Southern and East Africa Business Unit, leading and executing the business strategy across Mozambique, Namibia, Botswana, and Zambia. All right, that is Martins Coca-Cola change of leader.